So today we're going to talk about stocks and shares. We're going to talk about an ISA. We're going to talk about the blueprint for investing that I'm aiming to achieve. And we're going to talk about the journey of this series. I have bought 5 stocks. I'm going to explain each one. There's a lot to unpack, but at the end, I'm going to reveal 2 more, which are crypto-related stocks. Because there's reasons for it. I'll explain. If you've not yet done so, hit the subscribe button. If you want more content and more stuff, hit the join button, where you'll see more of my stuff. I'm going to be revealing more and more content in behind the scenes sort of metrics, certainly little clips and stuff, but live streams, Monday, Friday, I'll be doing those so you can get seen a bit more, which is better for questions. Now let's get into it. Stocks and shares, ISAs, taxes. I hate them. So an ISA mitigates that, right? Stocks and shares ISA is what we're going to focus on now. UK taxes are like this. Now, if you're in the UK, you'll know this. If you're not, sorry, I know. But you get taxed on your interest, you get taxed on your capital gains, you get taxed on dividends. I'm doing a dividend portfolio. I'm also looking to make some money via doing it, right? So I want a place where I can do it. £20,000 per year I can put in every April for a full year cycle, and it will be limited to 20,000. But anything that I make is tax-free, so any dividends, any interest on cash, and most importantly, value appreciation is free. I cannot offset the losses though, that's the downside. I am going to be focusing, as I say, on stocks and shares ISAs, and you can pretty much put anything you want in an ISA within the platform that it tells you to, right? So US stocks, funds, UK stocks. There's a mixture of US and UK in my fund this time, bit different to last time. So if you were on my Patreon and you remember my first portfolio, I kind of got fed up of it because of the taxation on it. I didn't make much money on it, but I realized very quickly I own a company. I get dividends sometimes, not all the time, but sometimes. My allowance is gone. So I was like, right, let's do an ISA. We'll do it nice and slow. And I'm going to reveal my little blueprint of what I'm going to do over a period of time. This is going to be a long haul. So this is episode number 1. So if you want to join the journey, hit the subscribe button, right? So let me explain very quickly something very obvious. We're not talking about stocks, right? As I said at the start of the video, stocks and shares. As I said before, there's going to be 2 related to crypto as well. Now, this is obviously an Apple stock, just to give you an idea. I'm going to be showing you a platform of what I'm going to be tracking on. And yes, I will be using Trading 212. There's a link below if you want to get a free share. Basically, it's a referral link. It's not a paid sponsorship, but if I refer you, you get a freebie. Why not, right? Certainly if you can get in. Now, when the markets are really hot, sometimes you'll struggle to get into these platforms. So make sure, even if you're not interested in investing, get yourself sorted, do all the KYC and the stuff that's required, and then it makes life easy. So let's talk about the most obvious thing. Said it before, stocks. Now, I want to reveal the 5 that I'm doing, but within this 5, I'm going to show you kind of a bit of a blueprint of what I'm following throughout. Apart from the 2 wild ones at the end, the reason why they follow the crypto market, obviously most of you guys follow crypto, and it makes sense if we're going to buy low to sell high, and wait for it. Remember I said before you can only put £20,000 in these ISAs? Well, your value appreciation, if you sell it into profit, it is extra capital, right? So if you're making money, you can keep it. Kind of makes sense. So yes, I'm limiting my own capital expenditure, 20,000. But if we make a bit of money due to some very volatile crypto-related stocks, guess what? We're going to do it. So the first one I'm investing in is the London Stock Exchange Group. Kind of obvious, right? But I'm going to explain to you a little bit of what I aim to achieve. Now, this is a platform called Snowball Analytics. It's amazing. I found it very recently just looking away because I was planning on doing this and I wanted a really good area of everything in one place so I can do my research, I can do my tracking, and I can find dips and I can do all kinds of stuff within my portfolio. But I also didn't want to just show my Trading 212 all the time because it gets annoying and you've always got to log in. It's a pain in the ass. So there's a link below to this. You do get a discount, I believe, if you go on their social media. They do have a summer discount right now, and I think it's actually already on the website. It's a limited time only, but this is a very, very affordable website. There's a lot of websites out there that are very, very expensive, like £300, £400, £500 per year. This is very, very low cost, and it's really good. So that's that out the way. as you can see, I do have a position in this. I have imported my spreadsheet, my trading 212. It is not up to date though, so bear with that. But the stocks that I've bought are correct, but they numbers are not 100% correct. So as you can see, I have bought this. Now you're probably noticing, oh my god, it's high, but look at the growth of it, because the blueprint is very simple, and I want you to remember this. I am looking for dividend growth. I am looking for a dividend streak, and I am looking for a growing asset with solid financials when it loads. As you can see, growing revenue, not many liabilities, more assets, profit, all that good stuff. Now, a lot of people get caught out with dividends by going for the highest yield possible, but sometimes those high yield ones are falling prices at a rocket rate. I want slow, I want nice, I want a growing dividend that is on a streak, that is not going to get interrupted. Now this will get interrupted because it's had a massive spurt recently, but as you can see over time, it's growing. And that's what you want. So that's the first one. Very, very obvious, very, very simple. It has a dividend rating score of 90, so it's really high and it's pretty good. Another one. Yes, I'm in crypto and I'm supporting Visa, sorry, but you can see again another strong looking asset, right? Sometimes it's good to know what you're going into, and Visa, I think we all know what it is. Again, very, very small position, only just started out, and as you can imagine, I'm going to be dollar cost averaging. If you don't know this, personal life's not been great at the moment, but I'm also moving house, so a lot of my money is kind of locked away. So I'm not going to go full tilt just yet, but we will build it up over time, and we do have till April to get £20,000 in here. So we've got a bit of time. We're all right. Now, again, going on to the dividends, look at the growth. The growth over the course of the 5 years, the 3 years, and the 1 year, ridiculous. Yield, not very strong, but it is a growing yield over time, and it's a reliable element. 14-year streak, 14-year growth streak, and as you can see. So let me just put this into context. Even though the yield is quite low, you are going to be getting more and more dividends year on year because it's growing every time. 15%, for an example, is ridiculous, right? So just to give you an idea, payout also 22%. So they're investing quite a lot of their profits into the infrastructure to make more money. In terms of the financials, very nice as well, because it is constantly going up, and that is what you kind of want, right? So we're not going to dwell on too much, but you get the idea in terms of what we're looking at. The next one, and another obvious one in my opinion, is UnitedHealth Group, right? Again, this is the last American stock that I've gone for. I've already gone for 2 because of tax reasons as well, because you do get a little bit more tax on that. But again, simples, doing well in terms of price. And I will show you an example in a second of a high yield dividend, but also ones that are just literally melting to the floor. Now, again, very, very strong growth streak, 23-year streak of payout as well, which is really strong. And most importantly, finances are looking pretty decent. So again, I don't really have to explain what these are. You know, you can probably tell what it is. If you scroll down, you can see what it is. It's obviously healthcare groups around America, which is pretty important. We all need health, right? So nothing too drastic with that one. The next one is YouGov. You've probably heard of YouGov, certainly if you're in the UK. Now, this one has a bit more of a drop in price, a bit more of a fair value, you could probably argue, but it's still very, very strong. YouGov is doing a massive, well, you've probably heard of them. They do a lot of surveys and stuff like that. So if you go through here, it's massive research. So you probably get paid for all the data stuff in terms of stuff. Like, people do this all the time. I've done it in the past as well. You used to get some ridiculous payouts for stupid questionnaires, but not perfect in terms of this situation. However, it is still an okay company. We had this back in the day and then we melted. But what we've actually been doing over the course of time is just slowly growing. So it's kind of one of those ones, it's kind of not perfect, but it's kind of there in terms of that. But the reason being and why I like it so much more is the financials look very, very strong in this company because it is an online based company, most of it, and it's doing pretty strong. So yes, that dividend element looks a bit, but that was almost 10 years ago now. So with a restructure and stuff like that, but seems to be clawing that back. So you can see what's going to happen here over time. Hopefully that will grow quite nicely. And the last one, Cohort. Now this is a one that is a little bit wild in terms of fundamentals. Let me explain what it is. It's a basically defense and security markets throughout, but as you read through it, there's a lot of stuff that they do: electrical, optical, electrical, mechanical systems, command, control, communication, computers, intelligence, server, target accuracy, reconnaissance. Bloody heck. You get the idea. We need infrastructure, industry elements like this in any stock market portfolio. I was weighing up BAE Systems as well, but this one looks a bit better. Fair value, you probably argue it's not doing too bad. You know, current prices, yeah, it's down a little bit, but not too bad. But look at the growth on it. The growth is looking really good. On the course of the year, pretty savage, as you can see, but it's growing quite nicely. And again, proof is in the pudding. Financials are looking pretty tasty too. So the total revenue, net income, all that kind of stuff. If you scroll down on a lot of these as well, by the way, if you just go to balance sheet, you can start to see what the liabilities are, the, you know, debt, etc. So it's, as you can see, not too bad. So revenue, stuff like that, really, really strong. Now, I wanted to show you a bad example. So AT&T. Now, the reason why I want to explain to this one why it's probably a good example to show you is look at the price. The price has been slowly melting. Now, this is not a small price drop. This is where people get caught up in the emotions of certain things. Oh, it's a really good, strong company. It's not. Now, again, let's look at dividends. Yeah, it had been growing quite nicely, very nicely, okay, but only 2% roughly per year. And then we had a massive cut in dividends. But what is the most important thing we need to look at is the fact that the revenue is also falling and also getting net debt. And, you know, billions of income is just vanishing. So stuff like that you need to be wary of. Now, there's stronger companies out there. Obviously, if we look at the likes of Apple, for example, just one more example, strong, growing, doing well. Looking at the dividends, strong. It's not perfect, but it's okay. But you're never going to buy Apple at these level prices because they are absolutely astronomical. But you get the idea. There's a way of doing investing with dividends and there's a way of not doing it. Don't get caught up in the yield. You want a yield that's growing for you to sit in, the price to be stable and to grow. Now, to give you an idea of this portfolio of 5, over the course of 5 years, average rate return on these assets, it's 18%. That's value appreciation. Dividends are just extra. So we're looking for very strong companies, right? Now, let's go through the portfolio before I start showing you some other stuff. So this just gives you an overall overview of what it looks like. Now, again, take with a big pinch of salt. These numbers are not 100% yet. Next video, they should be. Because it is Independence Day, I cannot rebalance my portfolio, and there's a couple I want to buy in terms of the crypto side of it, which I cannot do yet. So wait for the next video. Now, most important thing I need to talk about is information. Now, obviously, this is a bit wrong because of the way I've imported it. The passive income will be quite slow to start off with, but it will grow. My plan is to get to a certain point, basically £1,000 per year as quickly as I possibly can, and then grow from that point. But just to give you an idea, if we go to the analytics, these are obviously the stocks looking pretty awesome. As you can know, I've already just been through them. But if we start looking at the likes of dividends, this is what they're going to be. But most importantly, as I increase the amount of stocks that I have, you will start to see more stuff. But what you need is a rating for reliability. And I've got pretty reliable ones, apart from this one here. But we'll see how things go with that one. But as you can see, the growth, we're looking for the growth of each individual one to continue to grow. Obviously, more data will come through. This is the portfolio. Currently, apparently, I think this data is incorrect because of the way the profit has happened, but potentially it could outpace the S&P 500, maybe, depending on the types of stocks that we're going for. So we'll see how things do go, but as you can imagine, I still need to look at a lot of this information and go through it in more detail. Again, looking at the portfolio, but this is the thing that I like the most, is obviously finding dips. So if you're looking for things to buy, you can find out, well, which ones are worse? UnitedHealth, and obviously Cohort as well. But if you are interested in learning and finding stocks and getting some good ones with safety ratings, now I've put in the UK, if you put in the all US, or even, where's the other one? Oh no, it is all US, that's fine. You will find a lot of really solid assets that look pretty good. So Costco, you've probably heard of it, a really solid asset, still growing in price. Look at the dividend growth on it, really nice. Bit more spiky because of the way they do it, but on average over the course of the year, it is a growing dividend. Don't get too caught out by it, but a growing revenue company. It makes a lot of its money from the revenue of members. Can't remember what the figures are, but it's a lot. It's a lot of money what they make in terms of memberships alone. Hence why they can get these smaller prices. But that's a blueprint. That's the portfolio. Now, yes, I've said it. I think Coinbase will be a nice acquisition in my portfolio for the value appreciation side. I'm going to buy two, and I'm going to explain the two. There's no dividends involved. It looks like a dog's dinner, and it does, but it also follows the cryptocurrency market. November the 9th, 2021. November the 9th, 2021 was the date where the market pretty much hit $68,000, $69,000 for Bitcoin and melted, right? We all know one of the top triggers is when Coinbase is ranked number one, you sell your crypto essentially on the app stores. That's one of them. Now, we're looking at an average price here at approximately $80. It's already gone up quite a bit pre-market, even though the market's closed, and obviously what it fell on yesterday, etc. You get the idea. But that was roughly $381. That's a lot of money and a lot of multiples. If you get a 2 or a 3x and you put a couple of grand in, that's a nice little ISA amount that you've got extra that you can play with for more dividends in the future, which speeds up the process. So I am looking at this. Financials look like a dog's dinner, but it is a cyclical stock which is related to crypto, which is where the jeopardy of this portfolio comes in. We could put a percentage into these types of stocks and hope to follow the crypto market, as you should know that with me, and fingers crossed things look pretty good, but we'll see how things go. The reason why I want to buy this, and it's kind of obvious, is BlackRock and Fidelity and all these little stocky ICO, what am I about? ETFs and stuff like that, you get the idea. So all these introductory kind of, spot BTC funds and trust funds, all this kind of stuff is coming, potentially. They're all using Coinbase as their custodian, okay? So be mindful of the exposure that this could get. Yeah. Next one, and the only one I'm going to look at doing, is a thing called Riot. Now, it looks awful, horrendous, crazy, right? If I go to the 5-year, it looks a bit better. Let's ignore the stuff in the past, but this is a big blockchain cryptocurrency mining facility over in America. So Riot Platforms, it's together with its subsidiary, you get the idea, operates a Bitcoin mining company in North America. So this, again, looking at the timings, BTC had a spike around here and BTC had a spike around here, BTC mining. Now, this is very much, I'm unsure because of the past and how long it's been around, but if we get any sort of uptick in the price, now we are currently $13. At the peak of the previous cycle, or where the Bitcoin kind of popped off a little bit and halving and Bitcoin hash rate difficulty, all that kind of stuff was kind of going through the roof and hype. This was obviously going higher and higher and higher with demand. Again, not great in terms of financials, but there's a lot, you can see, there's a lot of multiples here. However, in terms of their net assets and stuff like that, they've got quite a lot of assets for obvious reasons. Now, where can I show you that? I can't. Can I? Bear with me. Yeah, current assets. Their assets are still decent. They've still got quite a lot of assets, which is good. So it's one of those things. You can see they've got growing asset list, which is obvious if they're building mining stuff like that. So yeah, interesting, right? So there you go. That is today's video sorted. I know it's a very long one, certainly if you are only involved in crypto and you're like, what on earth is this? But the reality is I want to build a portfolio. I want to showcase a portfolio on YouTube and grow, put it that way. So these are the two wildcards for potential returns. If that does go up to say $60 again, that could be a 3-4x. Be very, very nice, but it's over a course of time. Who knows where these can go?